In this exercise, we are going to be looking at the difference between traditional cost allocation of overhead and activity-based costing. We're going to calculate the actual overhead, the total product cost, and the total product cost per unit under both methods, and we're going to see how they compare. So if you look through just the overview to this problem, we see that we have a company that has been using the traditional cost allocation method since they started, and now that they have expanded their product offerings, they've become more complex, they're considering moving to an activity-based costing system. So that's a pretty common approach to how a company even considers moving to activity-based costing. So what happens here in this particular situation is they give us the following data to start with. So they give us costs of overhead broken out by type. And you'll notice here we have an actual total overhead of about 1.5 million. But it's composed of these four components. Now they've decided for each of these particular costs, they've identified a driver that relates to them, and this is the quantity of that driver in total. Now here they're just comparing two products. We could very well have, it looks like we had three products. We're just looking at two of them in this problem. So what you'll see when we talk about the number of setups and the number of orders and machine hours, it doesn't necessarily sum up to this total. It doesn't need to. So what we're doing here, they also, for each product, they give us the direct materials used, the direct labor used, and then they give us all of these different activity components, the quantities, but they also tell us the number of units produced of each product type. Ultimately, we're going to want to know the cost per unit. So let's go take a look at requirement 1 here. Using the above data, calculate the overhead allocation rate per machine hour using the traditional overhead allocation method. So you may recall the overhead application rate is your total budgeted overhead divided by your total budgeted, in this case, machine hours. So let's take a look at that. It's not product specific. It's total overhead, so the 1.548 million, and total machine hours. Those are the factors that we need in this case. So we can actually just go up and click on the 1,548,000 divided by the 45,000 machine hours. That tells us that our rate per machine hour is going to be $34.40. Now that includes all of our overhead, which could be depreciation, utilities, supervisor salaries, anything related to that. That's all overhead. Now we want to know, out of this overhead, how much goes to product A and how much goes to product B. To know that, they have to tell us how many machine hours each used. Now this is just a reminder, we can get this up here. Product A uses 4,750 hours. Product B uses 2,200. So what we're doing here is multiplying that by this $34.40 rate. Same with B. It's machine hours. That's what drives it in this traditional method. So we have all of that information there. Now we have the overhead that's going to be applied. Keep in mind, we had 1,548,000 in overhead. We're only applying, 240,000. So now let's go down to requirement 3. Calculate the total product cost of each of the two jobs, or each of the two products in this case, and the cost per unit produced by each job. So let's take a look here. Up under each job, they tell us how many materials were used, how much labor was used. They give us the quantity of each of those drivers, those activity drivers. We're going to use that to calculate overhead. They give us the number of units produced to identify a per unit cost. So what we essentially need to do here is, actually in this case, we're still on the traditional costing method. So we need to grab the materials, grab the labor. Now the factory overhead, we're still using traditional, so this is going to be what we just calculated up here, the $163,400. We'll do the same over for product B. We'll go up and grab its materials. We'll grab its labor. And just that one item of factory overhead that we already applied. So now it's just a simple matter of adding these three costs up for each of the products. Materials plus labor plus overhead. The number of units was given to us up here. So product A had 10,000 units. Product B had also 10,000 units. So the cost per unit is simply your total cost divided by the number of units you had. $18.62 per unit for product A. So the next step is to take a look at step 4, which has us calculating the activity-based costing overhead allocation rates. Now what you'll see down here are the same categories we had up above, same costs totaling up to $1,548,000, and notice also we brought the same activities and quantities down here. So what we need to do now is calculate a rate per activity. Setup costs are $465,000 divided by 7,000 setups. That costs $66.43 per setup. The ordering costs are $124,000 divided by 65,000 orders. It's a little under $2 per order. The maintenance is $875,000 divided by 45,000 of machine hours. It's $19.44 per machine hour. And then the power is 84,000 divided by 415,000 kilowatt hours, which is rounds to 20 cents per kilowatt hour. So that's what we have there. Now what we need to do with those rates is apply them to each job or each product. So the setup costs have a rate of $66.43, but then we have to identify how many setups did product A have, and here we have it as $650. Ordering costs, we multiply the 191 order rate by product A's number of orders, 795. For maintenance, we multiply that, the rate per machine hour, 1944, by the number of machine hours actually used for product A, which is 4750. Finally, power, we're multiplying the 20 kilowatt hours, 20 cents per kilowatt hour, by the number of kilowatt hours used for product A. So now we have all four of our components. We can get a total overhead cost of $153,249. We can do the exact same thing for product B. We're still using the same rates, but we're obviously multiplying it by a different number of setups, orders, machine hours. It's for the product B now. So now we need the ordering number of orders for product B, 1450. We need the number of machine hours for product B. And the last one is the power. We'll multiply the 20 cents by the number of kilowatt hours for product B. And we're going to go ahead and sum that up. So you can see here now we have a little bit more overhead on the product B side. Now, before we go any further, let's think about that. Product A had 153,249 of overhead under this method, which is less than what product B had. But if we go back up to the traditional, product A had quite a bit of overhead, more than double what product B had, solely due to the fact that it had more machine hours. So that right away we see a big difference. Now finally we're going to calculate the total product cost of each of the two jobs and then the cost per unit under activity-based costing. So again, we have to grab the direct materials and labor, just like we did before. Same numbers. The activity-based costing method doesn't change that. I'm going to grab these first for both products. Just going right back up to the original chart to grab that information. Now we need the total overhead costs for product A and product B under ABC. We've just calculated the subtotal up here. So let's just grab that, link to it. Again, we're going to add up our three product costs. So now notice, under ABC, product B costs more in total by a fair margin, $25,000 more, whereas under our initial item, product B cost quite a bit less than product A. So the fact that we have this new data to analyze has switched things around quite a bit. But let's go ahead and get the number of units, which if you remember was just 10,000 for each product. So if we do a cost per unit by dividing the total cost by the number of units, we're going to see that product B costs more per unit. Product B is $20.46 now, as opposed to $10.98. Product B really costs us twice as much as we realized, and now we realize it under ABC. Whereas product A, now it's only $17.60. We thought it cost us $18.62, so it actually cost us a little bit less than expected. It's not a perfect offset because there may be other products that use overhead in different ways as well. But what this really goes to show is that if you don't really know how the product uses the overhead, then you may be incorrectly costing your product, and that will lead to incorrect pricing of your product as well. So hopefully this exercise has helped to clarify this concept, the various steps for calculating the rates, applying the overhead, all of that. But as always, if you have any questions as going through these, please let me know. Thank you for your time.